Let's have a conversation. Let's have a conversation. Yeah. Let's have a conversation. Oh, yeah. Look. Yeah. Hey. Let's have a conversation. Woo. Pick up some gems, life is all you make. Go. We keep it real, we don't talk to fake. Tell them how this talk show on the net, coming for all the mates. Let's have a conversation. Woo. Pick up some gems, life is all you make. Go. We keep it real, we don't talk to fake. Tell them how this talk show on the net, coming for all the mates. Let's have a conversation. Yeah. Let's have a conversation. Oh, yeah.
Hello, everyone. This is Michelle Biggs, CEO of My Best Everyday Coaching and Consulting, and the host of Real Conversations with Michelle. And welcome to the season opener of Real Conversations with Michelle. And I have some very special guests joining me for this season opener, which is part of a series that I am kicking off titled Jumpstart 2023. And the first topic is financial wellness. And for those of you who are new to my platform, it is a platform that I use to talk about a variety of life topics with the goal that something that is shared, you'll be able to apply in your life in a positive way or in support of others. Like all educational type programs, I ask you to do your research just to make sure that what you're doing really does make sense for you. Okay, so I'm going to introduce my guests who are joining me. I have two very special women who are in my circle. First up is Miss Dionne Blanks. Hey, Dionne.
Hey there, how are you?
I am good. And while you are talking, I'm going to make sure everything's working in the background for my Facebook pages. So why don't you tell the audience a little bit about yourself?
Sure. My name is Dionne Blanks, and I am the founder of the Economic Empowerment Circle. Inside of my organization, I assist women with money mindset, money management, passive income strategies, as well as investing so that they can secure their financial future. So I'm an accredited financial counselor. I've been doing this since 2017, and this is my passion. Is what I love to do: help women really understand their financial situation and how to become financially well.
Thank you. We may have some men in the audience too, so I'm sure your advice
Men
will
and
help them
women,
as well. Yes, ma'am. Yes, ma'am.
absolutely.
Yeah. Next up is Miss Tonita Austin. Hey, Tonita, how are you? You are on mute, Tonita.
I'm great. How are you? Thank you.
Good. So why don't you tell the audience about yourself?
So, Tonita Austin. I am the CEO of M.T. Austin and Associates. We're a full-service accounting firm. We coach and support small business owners and individuals and nonprofits.
Good. So, ladies, I'm going to start off. It looks like everything is on, and I'm not hearing any echo. So, Um, I'm gonna start with a definition of financial wellness to get everybody grounded, and I want to hear your feedback in terms of does it resonate with you or not. And Tanita, I saw your post today, so I want you to share what you said. But I thought it was right on point. But from according to consumerfinance.gov, it says they actually came up with the first ever definition for financial wellness and financial well-being, and it says, in a nutshell, they define it as having financial security and freedom of choice both in the present and in the future. Is that how you talk about financial wellness? Or tell me how you talk about financial wellness when you're coaching folks. Dionne, why don't you go first?
Um,
Okay.
okay, sure. So for me, financial wellness is more so about stability. And so I do agree with that definition because, as hard as it may seem, you do have to keep your eye on what's going on in the present while you're planning for the future as well. So, in my mind, while I'm coaching, I'm always making sure that the individuals are understanding where they are currently and are aware of their current financial situation, because I know financial unwellness is not knowing what's going on, not knowing how much money is coming in or going out, and not having a plan for your financial future. So financial wellness is about the current, as far as understanding and having a grasp of what's going on right now, as well as also understanding what's needed for you to have a future that you can look forward to and not dread getting older and retiring and all of that. So financial wellness is more so about stability and awareness than anything else for me.
All right. Thank you, Dionne. Tonita, anything you want to add to that?
Yeah, so when I coach individual, I mean we're always talking about money and finances, but I think to me wellness is your state of mind when you think and work around money. And so for us to teach people financial literacy is one thing to teach them how to budget, but if they constantly have anxiety around money, then they're not going to utilize those tools. So the
Mm-hmm.
first thing that I try to do is to find out why they're having anxiety around money and try to um, focus on that first so
Mm.
that we can be more productive. And so financial wellness is freedom to me,
Yeah.
the freedom from the stress about money, freedom to be able to do the things that you love to do and not worry
Mm-hmm.
about them. And then, of course, like Dionne said, just to be able to plan for your future.
Yeah. And when did you all started really thinking about it for yourself? Because I'll be honest, for me, did not grow up in a wealthy family, right? Blue collar. They were making ends meet, from check to check. And for me, becoming financially astute, it did not happen until I started working. And then it actually did take some years for me to actually pay attention to what was going on, right? So where did it start for you guys? Tanita, I'll let you go
Now for
first this time.
me,
Okay, go ahead. Go
okay,
ahead,
yeah.
Dion. Go
Mhm.
ahead, Dion.
Okay, I can wait my turn, no problem.
Go ahead, Tanita.
So
Um,
Tanita, go ahead. Tanita, go ahead.
so I'm an accountant, and I have an accounting background, but really getting into the coaching was because I myself, when I was separated, ended up, with the sheriff knocking on my door and struggling to pay bills because I was so um, focused on like trying to just keep things together um, that I just kind of the stress caused me to just not pay attention to things. And, like I didn't grow up like you, I didn't grow up wealthy and we didn't talk about budgeting and that kind of thing. And so I ended up as a financial professional having to go to someone like Dionne
Mm-hmm.
and ask for help. And they really just kind of helped me get back on my feet. And so that's really one of the main reasons why I do this work, because I've been there and I brought myself back up, and I, just want to do that for others.
Yeah. Dion, how about you?
very similar story. So my major was finance. I was a financial professional working in wealth management and all these good things. And I decided to start a business. With that business, when I closed it down, I ended up tens of thousands of dollars in debt, owing like literally everybody, my personal
Mm-hmm.
credit, my business credit. I had spent everything I had in my retirement for my business and all of that. So here I am dealing with all of this by myself because I was too ashamed and embarrassed to tell anybody. Because what does that look like for me? I work for a bank in wealth
Mm-hmm.
management and all these things.
Girl, me
S-
too. Yeah.
yeah. So,
Mm-hmm.
it was that realization. And I said, Lord, when I get out of this, and it was in 2017, I am going to help somebody to get through their financial funk, as I call it.
Mm-hmm.
And so
Mm-hmm.
that's when I became a financial counselor and started to work with people on savings and debt mindset. And then it just grew into investments and other things that, a more holistic look at their financial life. But my story was very similar to Tanita's as far as going through my own mess financially, coming out on the other side and saying, whoa, that was a mess. Other people out there, they need help as well.
Okay, so I asked you guys this question. How many of you in college got those credit cards, thought we were grown, and got ourselves in trouble,
For sure.
right?
Yes.
I mean, that was the first entry into financial unwellness, right? And then having to pay those bills and not having a job to pay for those bills, right?
Mhm.
Spending more
Financial.
than I actually had, right? So it
Mhm.
is we haven't been, I think a lot of us, and I'll talk about the African American community, have not been taught about financial wellness, right? And I'm not saying it's everybody, but I know if you've grown up like myself and some others, where do we start? Where do we begin? Um, Based on your experience, what are the mindset shifts that need to happen in order for us to obtain financial wellness?
Who's
Go
first?
ahead. Go ahead, Tonita.
Uh, I, what I usually come across with most of my clients is that they're just either afraid of money or don't respect money. And
Mm,
it really depends on how they were raised and how money was used, or not in their family background. So when we do kind of like a money circle and start to see like who controls the money in your household,
mm-hmm,
which usually ties to like how you grew up and who controlled the money in your household. And
mm-hmm,
so I think the first and the biggest step is just really asking for the help. And that's usually the hardest thing to do, but to go to someone and say, like I'm not doing well with this.
mm-hmm, mm-hmm,
And to just really also be committed. So even if you're taking one day a month, if you know you don't manage money well, and just like to commit yourself to sit down once a month and just really focus on your goals.
mm-hmm. All right. Dionne.
For me, I feel like as far as mindset shifts, this is like the most important piece of it because a lot of what we are seeing in our adult lives with our money is a reflection on how we were raised, exactly as Tanita was saying. So, one of the first things that I ask clients to do is to really get familiar with themselves and their belief system and why they believe what they believe and what they were taught. What experiences did they have surrounding money? A lot of people do not really take the time to make the connection between what they experienced as children and
Mm,
what is playing out in their adult life, what they heard about money, how they feel about people with money. And one of the most common mindset shifts that I have seen in our community is the belief that people with money are greedy. They're selfish, they're
mm,
bad. All of these negative connotations and adjectives are used to describe people with money, whether it was because of an experience with it or something else that may have occurred. What they don't realize is they will never become that because their mind will not allow them to become something or someone that they feel is bad or
mm-hmm,
greedy. So you have this mindset working against what you say that you want, but you don't understand that your mind is trying to protect you from becoming this person that is bad, that is greedy, that is selfish, and all of these things. So, really taking the time to unlearn what you've learned about money and planting those seeds of wealth and understanding how money can be used in a way that is good and a way that is going to be helpful to you, your family, and your community. So that's one of the biggest reasons I created a journal for women, men, whoever, to really get more familiar with themselves and how they feel about money and really come to terms with some of those beliefs that they may have been taught as children or just growing up, even through college and just throughout life.
mm-hmm. What are some of the other myths you guys have heard from people as well in terms of mindset? You mentioned a couple, Dion. Any other?
Yeah,
Yeah.
a lot that we hear from church, even, a lot
Mm-hmm.
of us were
Mm-hmm.
raised in church to
See a
believe that,
penny, what
Say
is
that,
it?
Tanita.
The one about what was it about the penny? See a penny, pick it up. The rest of the day you'll have bad luck, or
Mm.
Oh, that's a great one. And even it's so funny you say that because one of my favorite songs in the 90s was Biggie Smalls, More Money, More Problems. Who
Mm.
wants more money if it's going to come with more problems? But I know it sounds like a silly example, but those are the things that we hear repetitively and we don't even take the time to stop and think about, okay, me singing this over and over and over again is actually helping me to deflect what I say that I want. And
Mm-hmm.
so it's very mental, and it's very you have to really be focused on what you actually want to bring into your life, um, and really be careful about what you allow to go into your ears and into your mind whenever, as it relates to finances and money.
Yeah.
And
Sunita,
some of
anything else? Go ahead, Tina.
Yes, a lot of it is in our DNA as
Mm.
well. I think people don't realize when you think about Tulsa and you think about all these, this wealth that we had even before we were brought to these United States, that was taken away from us. Even if you're Native American, if
Mm-hmm.
like we are afraid almost to be wealthy because of this historical baggage that we have, that we amass wealth,
Mm-hmm.
work
Mm-hmm.
hard, we build it up and we get it, and then it's just like burned down to the ground, and then we have to keep doing it again. So I think that people don't realize subconsciously is there's generational, this generational trauma that we also have to recognize is a part of our everyday thinking.
Yeah.
That
How
is so
many
good.
and how many of you I know, and I won't name relatives, but really didn't believe in putting money in the bank, right?
Oh yeah, the mattress.
I mean, just you don't put it because somehow it's going to disappear. You do not, you know,
Well, I
grandma
mean,
would lift up the mattress and it's like,
the
wow.
Bible, right? The
Yeah,
Bible.
yes,
And but
yes.
some of them lived through, the Great Depression and all of
Mm-hmm.
those things. So even though it sounds silly, it's like they've been to the point where there was a run on the banks and
Yes,
they were not able to access their money. So even though it sounds silly, it's like, oh, you kind of have to put it into context, and it doesn't make sense. But going through what they went through, you kind of understand why they're very cautious as it relates to, putting money in a bank and letting somebody else hold on to their hard-earned money.
exactly,
Mhm.
exactly. So I'm gonna
Absolutely.
try to get into some nitty gritty here. So if someone is, and before I even get to that, I have a couple people online. Hey, everybody! I see Derek on and Lester on. Lester is a financial professional, and he also said, "I see the same problems every day. I agree. Mindset is so important. Many of us let our past programming to control us." Thank you, Lester. Many of us don't learn about financial matters because we allow negative to continue. Yep. So definitely reconfirming what these ladies are saying. Thank you, Lester. So if someone is seeking to improve their financial wellness, where should they start to focus? Who wants to go first?
I would say, it's if they're really wanting to understand how to become financial well and improve their situation, they have to start where they are. There are so many people, they're like, okay, I'm about to take out this whole life insurance policy, get this LLC EIN, and get all this business credit. I'm like, you're doing all of that. But do you know how much you spend every month on your monthly household expenses? You're
Mm,
taking it all the way here. Start where you are. I always say become aware of your everyday monthly expenses. If I am meeting with you, the first thing that I'm going to do is to say, okay, let's pull your bank statements for the last 6 months. Let's see where you have been spending your money. Let's see your income. Does this match where you're telling me you want to go with your financial life? If not, you tell me where you want to make these modifications. And I feel like people over complicated. If there's a negative right there, then that's telling me either you need to, one, earn more income, or two, decrease your expenses, or three, both. You can do
mm-hmm,
both. One or the
mm-hmm,
other, or all three. They have to happen in order for you to be in a better financial situation. So I would say start where you are and be realistic. Stop trying to go all the way there before you have the basics, nailed down first.
mm-hmm. So understanding where you are financially in terms of debt as well as assets.
Yeah, I would do a
Am I
net
over?
worth
Am I?
statement.
Okay.
Absolutely. I
Okay.
would say the first thing is an income and expense statement. And that basically looks like looking at all the income. You would be surprised how many people do not know how much they make bring in per month if you ask them, no clue at all, as well as expenses. And no, of course your expenses are going to change and fluctuate, but there's an average that you can take of your expenses and have a good idea about how much is left over at the end of the month. And that is where you build wealth. You have to have a difference between your inflows and your outflows in order for you to have anything left to build wealth. So we start there with the income and expenses. And I would say at least once a year in January, at least do a net worth statement where you are putting down your assets and your liabilities. And then you can really get a good idea of, from year to year, is your net worth increasing? You want your net worth to go up. If you see it's decreasing, it's telling you that you've taken on too many liabilities, or your assets are not growing at a pace that you need them to grow in order for you to have positive net worth. So I think both are important, your income and expenses, as well as your assets and liabilities, to take a look at both of them.
Mm-hmm. Tonita, anything to add there?
And I would say I usually start with their net worth, because a lot of times people need to remove some of that shame or that feeling that like they're not doing anything right. They don't have any money. They don't have anything. And a lot of times, just like, you may be earning more than you think, you may be worth more than you think. If people don't really understand what assets means, to have assets. And when you start thinking about like the car they have and the house and whatever else they have, sometimes it helps to build them up and to also see like this is where you are, and then where you want to go from here if it's not looking like you want to look. And then I guess the other thing is that assets also means understanding the value that you have as an individual. So you may not be earning what you should be earning with your experience or your income level. I had a client the other day who was trying to pay for something for her son, and the son had a really valuable service that he could offer, that he could do and make money and pay for that thing that she wanted for him. So like to see, just to kind of turn it around and stop thinking as much about like what you don't have, but like what you do have and what you have to work with.
Yeah. And part of that, because I think once you sit down and you kind of analyze that, then what's next? What's next, you guys? Once they take an assessment.
For me, I would say if that point where you take the assessment, that is the very first step, because it's going to let you know, okay, because I talk to some people and they say, okay, they may have a spending problem, they may have a giving problem. I have seen clients who have plenty of money at the end of the month, but they give it away. That has to be dealt with, because you shouldn't be struggling giving money away to family members or whatever. What is causing you to do that action? Or you have plenty of money but you're overspending. Why are you overspending? A lot of times it is the why behind the action. So we can say, okay, yeah, your income must be higher than your expenses, but when they go to implement these recommendations and suggestions, that's the problem. What we're saying is very, very simple, but it's the mindset and the actual doing of the suggestions that really is where they have to focus. It's very easy to cut your expenses on paper, but whenever it comes to telling your child no, whenever it comes to telling your girlfriends no, I can't go on that trip. When it comes to giving to an organization or a church or whatever the case might be, and you having to say, no, I'm not going to be able to give the pastor's anniversary this year. That is the issue. That is where the hard part starts, as far as being able to say no when you have to say no to those things.
What about, go ahead, Tonita, were you going to add anything? Say anything more there?
I completely agree. I had a client who was making $250,000 and was still living paycheck to paycheck. And I had to sit with her when she called her child at college and told her she was cutting off her credit cards because she was paying for her car, her apartment, school, clothes, and
cell
she had a
phone.
credit card to just like
Mm-hmm. Mm-hmm.
whatever. And I was like, this is why, like, you should not be living paycheck to paycheck at this salary. But she
Mm-hmm.
couldn't make that phone call without me sitting on the other side of the desk when she picked up the
Mm-hmm.
phone. So
Mm-hmm.
yeah, I completely agree that it's easy to put it down on paper, but you have to keep your goals in mind. Like when you think about picking up that pen and write the check,
Mm-hmm.
for whatever, you have to really think, is this going to take me to the financial freedom that I want? Is this, what I talked about, what my goals are, is this going to help me get there, or is this going to delay?
Yeah.
Yeah.
I want to get into a little bit and talk about debt control and credit scores. So just talk a little bit about that. Because a lot of times, what I find, number one, some of us have more debt than we're bringing in money, right? So how do you start to chisel at that, right, to get that under control? And then talk a little bit about credit scores. 'Cause I think there's so many misnomers about your credit score, what you can do, what you can't do, and all that other stuff. Any insights you can talk about there? So want to get just a little bit deeper with this one. Who wants to
Um,
go?
I can go first. It's fine.
Okay, go ahead,
As
Dion.
far as debt is concerned, I feel like, of course, starting with your cash flow is important because you have to know how much money you're going to have left in order to throw at that debt. So, after you make your cash flow plan, I don't use the word budget, but after you make your cash flow plan, if you have money left at the end of the month, in my opinion, that is the money that you can use in order to eliminate completely your debt situation. Now, if it's more than you can handle, of course, bankruptcy comes into play, but you better be willing to take on the consequences that comes along with bankruptcy. And so, if that is not the case, and you really feel like you can pay your debt off, making sure you understand how much money you have at the end of the month in order to focus on the I say the smallest debt first. The debt
Mm-hmm.
snowball method is one of the ones that I recommend all the time because it gives you the motivation to continue going, and you can put your of course, make your minimum payments on everything else and focus on that one lowest balance until you have that paid off. Then after that's paid off, you use that money towards your second lowest balance until all of your debts are paid off. The other suggestion is to pay your highest rate credit cards off
Mm-hmm.
first, but it's just it may take a little bit longer. Those balances might not be as low as the other one. So
Mm-hmm.
figure out if you want what method of attack you want to use as it relates to paying off your debt and how much money you have to do that with. And there are software programs out there that you can use in order to actually come up with a payment plan, and it will tell you to the exact date. I know with my clients, they know the exact month and date that they will be completely debt free if they stick to the plan and stop charging. So
Mm-hmm.
by the time you get to someone like me, you've already made up your mind. Okay, I have an issue,
Yeah, you're out of
and
control.
you're out of control.
Yeah,
Exactly.
yeah,
And so at
yeah.
that point, you can't create a plan and keep moving the yardstick back and back. So, I asked them to stop charging. You're going to have to stop charging. That's the first thing, and start living beneath your means, because if you don't, you will not have any money in order to get out of debt. You have
Mm-hmm.
to have that cushion between your income and your outflows there, and then devise a plan for debt payoff while you're not charging anymore. And then you'll be able to see an improvement with your debt as well as your credit score. Because, of course, it goes hand in hand. The more debt you have, the higher your balance as it relates to your available balance on your credit cards, the lower your score. And so the more you pay off your credit cards and lower your credit card balances, the higher your score will go. And
Right.
so that's it goes hand in hand, the debt payoff and the credit score. You'll see an increase once you start to pay off your debt and start to not use so much as far as the utilization on your credit cards.
Yeah, and then and then talk about credit score and our ability to purchase the things that we really want. If you don't have that in control, you're going to pay some outrageous fees, right? You'll
Mhm.
find yourself paying some outrageous fees. I remember someone who wanted to buy a car, and I mean, 11% interest typically when you're going outright with a auto company. But they were, I mean, it was like 20 something percent. It was crazy. It was some outrageous. But people don't understand that if you, that's what you're going to pay, and you're continuing to put more out when you're doing that, right? Because it's not going in your pocket, it's going to the companies, right? You end up paying more than you actually, the item even actually is worth,
Oh, for
right?
sure.
Yeah,
Hmm.
yeah. Tanita, credit scores and things like that. How do you address that with folks?
Well, I like to have them look at their credit card statements and look at, because they will tell you how much interest you're going to pay
Mm-hmm.
this year at this rate if you don't pay off these balances. So sometimes that's an incentive for people, and they're like, "Wow, I'm paying how much in interest?" Um, and I try to empower them to shop around. If you do have good credit, or shop around. If you don't, um, I really like the Consumer Finance Protection Bureau. They have a lot of free resources. I mean, you can take your own classes and understand what all the terms are, because there's a lot of terms that are using credit, and also your rights. When collection agencies can and cannot call you, and how to know what a real collection agency is, um,
Mm-hmm.
and also how to find out about, how to plan to reduce your debt. I mean, they have
Right.
worksheets. I mean, and all of it is really free.
Yeah.
So, like you were saying, Michelle, people don't understand, like, your insurance policy is going to increase if your credit is not scores.
Everything. Car insurance.
Yeah,
Yeah,
I mean,
everything goes up. Yeah. The stuff
and
that the things that you need actually, right?
Hmm.
But you end up paying out the pocket for it
and
because
employees, employers as
right.
well, you
Yeah.
know, can
Yeah.
use that as a basis. If I'm, a CFO with really bad credit, they're going to be looking at me to make sure I'm not
I
trying to, like,
Yeah.
get some side money. So,
Yeah, yeah. So how do let's talk, because I see a couple of my guests are talking about investments and things like that. So let's say you're ready, you kind of manage your finances, you got them under control. How should we be thinking about investments, and what are some of the things we should be thinking about um, when it comes to investing?
well, I mean, I think it really depends on your risk,
Mm-hmm.
your risk level, what you can invest, how much you have to invest, what your goals are. If you have children to think about, sometimes a business is an investment in
Mm-hmm.
itself. Well, it is an investment in itself if it's a good business. Somebody mentioned life insurance policies. I see that all over the
Mm-hmm.
media about this, whole life policies. I'm a strong believer in term life. By the time I'm
Okay.
70, I shouldn't need any huge policy. My children will be okay. My house will be paid off. So if you're living the right way while you're living, um, then there's other ways to invest your money than in a insurance policy. That's my personal opinion. Uh,
Mm-hmm.
so I just, again, it's back to, people want to right away, what should I invest and how should I invest, when, like, your debt is up to the ceiling. You
Mm-hmm.
don't have a retirement account. You don't have any, educational savings accounts for your children. You don't have an emergency savings account. So I think this is when you really should have, to me, a professional to really set your goals and make sure that you're not investing in investments when you should be investing that in yourself.
Mm. I like the way you said that. Investing in yourself first, right? To make sure you're good before you're out there investing. I'm gonna look at some of these comments here.
And if I
Um,
could add on to that real
Go ahead.
quick,
Go
as
ahead,
far as
Dion.
investing is my jam. I absolutely love it. And actually in my academy, that's what I focus on is investment education. But a lot of times, even if you don't have that foundational knowledge, if you work for an employer who offers a 401k plan, that is the by far the easiest way that you can begin investing, especially if they are going to match you dollar for dollar up to a
Mm-hmm.
certain percentage. So I would say if you have
Amen.
taken care of your finances, you have some money that you can put towards your 401k plan, go ahead and do that at least up to the match amount, because it literally is free money. And the earlier you start investing, the longer you have for your money to compound and grow. So I would say start there. And if you still have additional income outside of that, you can open up a Roth IRA or a traditional IRA at a brokerage account and continue investing above and beyond what you are investing in your 401k plan. Or you can consider real estate investing or other types of investing. But the foundation is going ahead and making sure that you are financially stable, your emergency fund is in place, you are taking advantage of your 401k plan, and you are maxing out an IRA if you choose to do so. But getting started investing is super important. Just like Tanita was saying, if you do have high interest debt, that's the biggest investment, because in the market you get about 10% on average return. If you're paying 25%, that your best investment might be to pay off your debt, and
Mm-hmm.
then
Mm-hmm.
continue to invest
Absolutely.
along that way. So you really have to look at your financial situation as a whole first and make those wise decisions that are going to bring you closer to financial freedom through investing in assets, things that are going to actually make you money and grow over time.
Yeah, one of the things in, my background, I've been in HR for 35 years, and I remember, some of the younger employees coming in and they were hesitant doing the 401k. It's like, well, first of all, to your point, they're matching that's free money. They're matching up to 4% or 10%, whatever that is, right?
Mhm.
So you don't want to not take advantage of that. And it's pre-tax, right? So that also has an impact on when you're filing your taxes as well, in terms of your income that's reported, right? In terms of your pre-tax dollars and all of that. Tanita, I'll leave that for you in terms of your expert advice. But that's as much as I can say about it. But it's additional money that you're getting, that your company is giving you, right? So why would you not do that? Um, you talked about whole life insurance. Derek had asked that question. What about whole life insurance? So you touched upon that a little bit, Tanita. Anything more you want to say about that?
I think I said it all. It's kind of the latest thing, like I said, I've heard around on Instagram, because insurance people can make a lot of money selling whole life insurance policies, just
Mm,
because of that component that they have, to to invest, um, that they sell it as an investment.
yeah.
And so to me,
And
it's
what's
much.
the watch out with that, Tanita? Just from your experience as an accountant, what's the watch out when people do that?
The policies are always more expensive than a term life policy. Um,
Hmm.
the what catches people is not just investment, but that it can go beyond. Most term life will stop at 70,
Okay.
and so this will go beyond that age. But um, if you are planning your life right, like there's way of it, like you said, the 401k plan, if you have a Roth or another IRA, you can put savings away. There's an able account, state able accounts. If you or a child is disabled, where you can save up to 16 grand tax free.
Mm,
There's just so many other ways to kind of if you have children, to set them up. Because if you go,
yeah.
like
Yeah.
they're just going to get that money. That's my thing. Like if I'm
Right.
doing things right, you shouldn't need my insurance policy to live. Like
Right.
everything should be taken care of. Um,
Yeah.
so that's just, to me, that's not. I think that Dionne named all the best investments,
Hmm.
that are better to me than whole
Whole
life.
lot. Yeah. Lester says insurance is not investment. So I think he
Yeah,
just
buy term and
tied it
invest.
up in a bow. Yeah, he tied that up in a bow. Okay, I'm going to switch over a little bit um to talk about entrepreneurship, right? Because I have a lot of people who are connected with me who are entrepreneurs. Might be people out there who are trying to step into that space. So, what are some financial skills entrepreneurs need for continuous growth and success?
I would say one of the mistakes I can share what happened with me. One of
Okay,
the
go ahead,
biggest
Dion.
things is making sure that your personal finances are straight before you go out there and try to invest in a business. I see this
Okay.
all the time. It happened with me. You have to make sure, especially if you have a brick and mortar like I did, it was a retail location. It's basically you have two mortgages, you have utilities, you have employee expenses, all of these things that you have to consider before you jump out here and open a business. Make sure that you have some savings available. And the other thing that I would say is people are all on this whole business credit thing and they don't have a business yet.
Mm-hmm.
That is like the number one thing that I am saying. It's like, Dion, I happen to get this credit card. It's a business credit card. What are you going to do with it? I'm going to buy a luxury car. I always want this. You do know that you're going to have to make these payments, and these are real conversations. Like, you do know
Mm.
that G Wagon is this amount per month. You do
Mm-hmm.
know that you are a personal guarantor to this business credit, which means no, it's not going to go on your personal credit if you pay, but let you default, and you'll see how fast those card companies and car auto loans and all of that go right on your personal credit. And so I
Mm.
think that people are very delusional about what it means to have a business and business credit, and it's not free money.
Mm.
It's just not free money as far as that business credit is concerned. But as far as entrepreneurship, just making sure that you have those financial foundations established. And if you know that you're not good with money, get an accountant. Or even if you are good with money, I still have an accountant, because it always helps to have a second pair of eyes, whether it's for tax deductions that you may not know about, whether it's for bookkeeping, running reports. Sometimes, in order to get larger loans, they want a statement from your accountant or your bookkeeper or someone who's been keeping your books. So, just making sure that you have someone in your corner who is strong where you may be weak is a good idea if you're going to start a business.
Yeah. And Tanita, anything you want to add there? Because I know you work with small businesses a lot as well.
Yeah, let me see. I think the number one thing is knowing that you need to separate your business from your personal.
Mm.
Absolutely is the number one thing that most business owners don't do. It just gives you and your accountant less of a headache when it
Mm-hmm.
comes, to tax time. Also, just to understand the different types of formations, business formations that you can have, because
Okay.
again, there's all these internet
Yeah.
professionals.
Talk it through a little bit. Because I know I had to go through that in my head too when I was starting my business. So talk a little bit about that, Tanita.
Yeah, again, to what Dionne was saying, and people, here they should have a LLC and they should have a S corp and they should have, all the tax benefits of it, and getting business credit. So, all the different types of formations. It really depends on your cash flow, as well as the type of business you have. Everybody doesn't need a corporation,
Right.
to have a small business. And I tell a lot of clients, so there's a sole proprietorship, which means you're just making t-shirts out of your house. You haven't even told the state, that you have a business. You're not an LLC. Everything's going under your social security number. And then you can also, so kind of the next level, and they're all different levels of protection, is how you could kind of think about it. So a sole proprietorship or LLC, a sole member LLC, is like this with your personal finances.
Mm-hmm.
Like there's not much. If something happens and somebody sues, they're getting everything you own.
Mm-hmm.
Um, if you want to have a corporation, it's really because you want a completely separate corporation is completely separate from your personal. So you have to file like two tax returns.
Mm.
Now, here, some of the tax benefits are better, but you have to incorporate. There's a lot of expenses, legal expenses. Your accountant is going to charge you a heck of a lot more to do a corporate tax return.
Mm-hmm.
An S corp, which is which a lot of people are forming as well. has a requirement that you have to pay yourself. So I see a lot of people forming S corps. They're not paying themselves a paycheck, which is a legal requirement of having an S corp. So I think you really have to do your homework and understand which one is better for you and which one you can afford. Because if you can afford a payroll service and you can't afford, to pay to have your taxes done on those levels, then you really should just be a sole member LLC. And especially if you're a new business and you really want to wait until okay, I'm really gonna do this.
Right.
Like, I'm selling t-shirts. I'm doing good. Things are, business is booming. Okay, now maybe I need to incorporate.
Got it. And I'm hearing a new one that I've just learned about probably over the last year. PLLC. Have you heard that one? PLC.
You mean a private?
PP. Yeah. Instead of LLC is a PL. I think it's called PPC or PLC. Anyway, it's something I've just learned about, and I don't know what it is. But I have a couple of people
like
who
a
have done that.
Liability company.
Yeah. Is that? Yeah.
It's some accountants or people who may be in the service industry, but it's an LLC.
Yeah. Okay. It's another name for LLC. Okay. Cool. So based on, and you kind of tapped on it, and Dionne, you made mention of this about entrepreneurs need to learn the foundations before they start. What are some of the foundations? Foundational stuff that you're talking about?
Yeah, so basically personal finance, number one, to make sure that you're going into a business and you're not already in personal debt up to your eyeballs and
so that's the first thing you talked about.
Yeah, that's the first thing. But in addition to that, knowing the basics of business financial statements. So you'll know what to ask your bookkeeper or accountant for. And so one of those statements that I would say is to say, okay, can I get a profit and loss statement? Basically, it's a statement that's showing your profit and loss over a period of time so that you can see how is your business doing on a month to month, quarter to quarter, year to year basis. So understanding what is on that statement, it's going to show your revenue, it's going to show your expenses, it's going to show your profit or your loss. And so like that is one of the things that you can learn from a basic accounting class or basic bookkeeping class, or go to your technical community college or something like that, just to take a class. There are classes everywhere, as well as a small business administration. They offer, introduction to business finances, so that you can kind of get an understanding of what do you even need to know about these statements in order for you to understand what's going on when your accountant is telling you, hey, you have a negative, or you have a net loss. What does that mean to you? How can you improve those numbers? So I would say having an understanding of your business financial statement, starting with the profit and loss statement, would be the number one thing that you might want to focus on there.
Okay. And I'm gonna switch to children. And someone asked, actually one of our sorors asked this question. Can you please repeat what kind of account? Tonita, I think you touched upon this. What kind of account you can save up to $16,000 if you have a special needs child? Can you say more about that?
Yeah. So many states have a ABLE account. It's ABLE, where you are able to put savings into an account that up to $16,000 for an adult or a child. And you can use those funds for school, for, if they need a car, any living expenses, pretty much anything. You could get a certified, which means from a doctor's letter, but you can also self-certify. So it's a very fluid, way of being able to save. Other family members can also contribute. So the good thing about it is that anything that you put into the account is a tax deduction on your state tax account. So you can care for your, put money away for them, if they're young, if they're older, it doesn't matter. And it doesn't interfere with any Social Security benefits that they may receive, which doesn't happen, if they just get a regular job.
Okay. Okay. So that's good information to know for individuals who are um, have a special needs child. So a little bit about what age should parents start educating their children about financial literacy, and what are the topics they should cover?
Zero.
Okay.
No. I guess trying to think of when we first had the conversations. I mean, I would take my children to the grocery store, as soon as they could count, and I guess when they're probably, in grade school, when they're starting to learn math,
Mm-hmm.
how much do you need for that game that you want?
Mm-hmm.
know,
Mm-hmm.
you're going to do chores, and so if they're doing chores and they get an allowance, I believe in allowances or paychecks or whatever you want to call it, um, so that they can see the money that they need to earn to get the things that they want. I was 14, I think I got my first job because my parents were
Mm-hmm.
like, we're going to take care of what you need.
I know.
All that stuff
Me
that you
too.
want
Right.
is on
Absolutely.
you.
Yeah.
So, when they get to middle school, it's, again, take them to the grocery store. Like, here's your list.
Mm-hmm.
Each of my kids would get a list. You tell me how much money we're going to need when we get up there and start calculating the sales tax, looking at the labels. Don't just go grab any bread, but like which one is on sale that looks
Mm-hmm.
like
Mm-hmm.
what you should be getting. Um,
Right.
I love the grocery stores with the scanners.
Okay.
I don't know if you have them there, but here in Pennsylvania, like you can pick up a scanner and you can scan, the items and put them in the bag. And so they get to physically see, how much things cost, and they can see that total adding up. And then they're like, also, I think one thing that we usually don't do is tell our kids how much things cost in the household.
Mm.
We want to
Yeah,
be
because they just see it. They're like, wow. Right.
like, I'm like, water really costs money. So like if
Mm-hmm.
you want us to go to Florida, then we need to cut some lights off on here when we're not in the rooms and take some
Absolutely.
shorter baths, like
Yeah.
I think all of this just to get them to start thinking. And then of course when they're older, you know, junior high, high school, introduce how to, budget their own money. Cash App has a new budget feature
Mm.
now just to entice them. They use it,
Yeah.
so they might as well learn how to manage money on it.
Yeah. Dion, what about you? Your thoughts
I
there?
would say for sure, as soon as they say I want, if they are old enough to say I want,
Mm-hmm.
whether it's a game, a piece of bubble gum, as soon as you hear that word I want, say what now? Okay, let me tell you how we're gonna do this. How much does it cost? Like literally let them segue you into introducing them to finances, even
Mm-hmm.
if it is something as simple. I did a video on YouTube with my 9-year-old at the time, on needs and wants.
Mm-hmm.
So it's very important that they understand, do I want it or do I need it? And then
Mm-hmm.
they can start right there making a decision between what's most important to them. And also, whenever they get money for Christmas, I went ahead and open an account up for them, a Fat Cat account here in North Carolina. We have the North Carolina State Employees Credit Union where they're able to get their own little card, their own little account, and they can
Okay.
see how their money is growing. And then I'm able to segue into like investing. If they're liking I remember my son, there was a game that came out, I think it was Fortnite or something like that. And I was like, okay, well, who makes the PlayStation? Oh,
Mm-hmm.
Sony. What's Sony's ticker symbol? How much is Sony trading for? So you allow them to kind of present an idea to you, whether it's something that they want, how much does it cost? So my son used his Christmas money in order to buy his own PlayStation game. That
Okay.
thing is still running, and they take much better care of it whenever they
Right, because they're using
pay
their own
for it.
money. Absolutely.
Yes, and my son, he
Absolutely.
started working early. I started at 14 as well, but my oldest son, he started working a job, and we were going through Zaxby's the other day, and he was like, "Okay, let me get such and such, like a huge order." And I was like, "Okay, hand me your card." He was like, "Oh, you know what? Let me get a small fry with a
Right.
water." I'm like, "Excuse me?"
Changes, right? Yeah. Yeah.
So those needs and wants, teaching them early, and then, allowing them to spend their own money is so important. It's not
Mhm.
punishment. It is
Right.
not. I remember when I started working, I'm like, a lot of people who I went to school with, they don't work. Their parents give them everything. Well, look, I appreciate my mother for making
I
me
sure
work
do.
for
Because
what
my
I
mom,
had.
we started, I mean, when we started working, my mom is like, okay, what bill are y'all going to take? So I had the phone. She's like, you on the phone more than we are. So you're taking the phone. And it was the truth. I was on the phone more than anybody else in my family. So I had the phone bill. And guess what? I was watching how much we were on the phone too. Right. So there's something said about, showing your kids what it actually costs. Joaquin, I don't know if that answered your question because she actually had that question. She said, I started my grandson with a savings account. I was told it is more beneficial to do uh trust for them. Is that true? So can somebody answer that?
To do a trust
To a
account.
trust instead of a savings account. She said, I was told it is more beneficial to do trust for them. Is that true? Instead of a savings account.
I mean, if
It's,
you're teaching them financial literacy, I think having an account for them is better. I mean, a trust is, you know, for the future to me.
Okay.
Like if we're talking about just teaching them their own financial literacy, having a bank account, there's like Capital One, and
Yeah.
where you can have their account connected to yours. You can see what they're spending. They can kind of put money away for savings, and I think that's really crucial in helping them see, how to manage money. And then my
Yeah.
my daughter said, she said, Mom, I finally get the difference between having money and being able to afford something.
Mm. Okay.
Because just because you see that balance in there, like you have to think, oh, that Spotify charge is going to hit, this month.
Mm-hmm.
And
Mm-hmm.
I want, X, Y, and Z. And so that $50 is really $10 that I have to spend. So disposable income, for them to understand what that means,
Mm-hmm.
what they have left over is really important.
Yeah. Have someone else with the kids. So we'll stay on the kid topic. One more question with kids. She says, I have an 18-year-old and want to open a Roth account so he can benefit from compound interest. So is that something that's good to do? Either one of you.
I would say for sure. So with a
Okay.
Roth account, you do have to have earned income, but if he's 18 and he's working, definitely he can open up a Roth IRA and start contributing into it. I would say stay away from anything like meme stocks or anything like that. If you can open up a Roth IRA and start contributing every single paycheck period, called dollar cost averaging, that's probably the easiest thing that you can do. And instead of investing in maybe one stock that you just heard about, you can invest in the entire market through something like a S&P 500 or an ETF that tracks the 500 largest US companies. So if he's 18, that time is on his side. I say all the time, if you are young and you are starting to invest, that is the best gift that you will ever be able to give to yourself, is to start
Amen.
early and
Amen.
to be consistent with it, and don't gamble it away. Just go ahead and act like you don't even have it. Go ahead and every single paycheck period, go ahead and put that into your IRA.
Yeah. Because I think now if I had started when I did, and I'm in good shape, but if I had started earlier than I did, I'm like, man, oh man, but definitely wouldn't have to be worried about anything. Not that I have to worry now, but definitely would feel more comfortable about certain things, right?
Right.
So, best advice for someone just starting in their career. I think we talked about go ahead and invest in 401k. Anything else? Anything else that's important? Someone starting in their career?
Um, keep your credit score
Keep your credit score.
high.
Yeah.
Just, do your homework. Um, if they're just starting a career, like Dionne said, just take advantage of anything that your job is offering you, uh,
Mm-hmm.
for 1K plans, the HSA, or the flexible spending accounts
Mm-hmm.
are really good benefits. Um, and just know, what you want, and
Mm-hmm.
have your savings account. Just really plan out your goals, and so that you're not stuck. When you
Mm-hmm.
want to do something and you have that financial freedom. Um,
Mm-hmm.
I would say, old school was always like, before you get married, get a house and travel.
Mm-hmm. Mm-hmm.
And I believe in that, because it gives you an idea of the world, and you might not think about, I want to go to Paris every couple months, if you don't actually get the opportunity to do that.
Mm-hmm.
Or,
Mm-hmm.
because children and family, is money. So
Right.
be able to do what you want to do, and be really ready for it.
Okay.
Yeah,
Cool.
I would say for someone just starting out, I would give an unconventional piece of advice, and that would be to go hard early. Because when you get older, you're going to look back and say, oh, I had the energy in order to start this business or to take this risk or that risk. There are a lot of things that I did earlier in my life that, had I started when I was later on in my life, it would have been a much more risky thing for me to do.
Yeah.
So if there is a business you want to start, if there's an idea that you have, if you want to invest in assets, if you want to buy a house, do that early so you can benefit from the appreciation. But also, if something happens, you have time to recover from
Yes.
that
Yes.
risk. So take your
Yeah.
risk early, but also while you're working, make sure that you are putting money to the side in a savings account and start investing. I cannot say that enough. Start to change your mindset at the age of 18, 21, whenever you start working, from a consumer to an owner.
Yeah.
Change your mindset early and start to invest in assets. Take your risks while you're
Yeah.
young.
Another thing I'll say, if you work for a corporation, they oftentimes offer financial advisors at a discount and things like that. So take advantage of that. I know, Tanita, you were talking about taking advantage of free stuff as well, right? But
Yeah.
take advantage. There's a lot of things out there, and what I find is a lot of folks don't even know what their companies offer in terms of benefits,
Hmm.
right?
Hmm.
And it's like, if you go behind, like I said, we offer financial advisors at a discount, legal services at a discount. I mean, it's just, things that are right there at your fingertips. So make sure you read your manual. Again, if you're in a larger corporation, for sure, read your manual to make sure you understand what's there for you, for sure.
Oh, can I
Let's
add something to that
go ahead. Go
real
ahead.
quick?
Go ahead,
If
Dion.
you, especially if you're just starting working, just like Michelle was saying, read your manual, because I know some people who have a vesting schedule. In other words, you stay at a company for a certain number of years and you earn that retirement match money. If your vesting schedule, you're fully vested, in other words, you own that money at 3 years, you need to know that, because if you're planning on leaving that company and it's 2 years and 8 months, you might as well sit right on there until you are completely 100% vested in the amount of money that that company has given you towards your 401k plan. There are so
Yeah.
many young people who quit right before they get vested in
Hmm.
their 401k plan match or profit sharing money. And that's money on the table that they just leave. They may have
Yeah.
had 2 weeks, 2 days, 2 months left.
Exactly.
So,
And
read
a
that
lot of times,
manual and understand that.
yeah, and a lot of times, 5 years tend to be typical on average. At least be somewhere. At least 5 years is typical, I
Hmm.
find. But absolutely read your manual. Um, Another question, and we're getting to the last question, but this is actually tied to it. Tracy, thank you for your question. Says, what advice do you have if you are on the back end and you're not where you need to be?
I mean, I think we talked about like all of the ways that you can, get the help and look at your finances and make some difficult decisions sometimes and on your priorities. But there's also no shame in getting a side job or a part-time job, um, just, temporarily to get you on to where you need to be. There are, to your point about reading manuals, Wawa. There's a lot of companies that you can work for part-time and get like really cheap medical insurance, or you can get stock. They give you stock,
Mm,
and they contribute. You know, I think their health insurance plan is like $10 a week.
mm-hmm.
It's just so it's worth it sometimes to get some to do your homework and look at some of these larger companies where you could possibly work part-time for a short period of time and get some of those benefits as well.
Yeah, I see Derek said, turn your passion into profit, right? And I think the three
Absolutely.
of us have been doing that, right?
Mhm.
And I think I'm, counting down for real, for real. I know everybody's like, when you retiring? I am retiring, y'all. I am. But coaching is something that I loved, and I just like, how do I turn it into something that I can continue to do and get paid for it, and enjoy what I'm doing. It doesn't feel like work to me. So
Yeah.
definitely, how can you turn your passion into profit? And yeah, talk to someone about that. Get a coach. Give me a call. Happy to talk to you. Right. And what I find, a lot of people, especially at this age, I don't know how many people I have spoken to who really just don't know what they want to do. Right. They just don't know. And sometimes just really being able to talk that through, when you think about the number of years you have worked. First thing I ask them is, what are you good at? What do you enjoy? Right. Just that simple.
Mhm.
Right. And then you can start to think about, how do you make that happen for yourself. So last question, y'all. Retirement. So for those planning for retirement within the next 1 to 5 years, what advice do you give them?
I would say if you're close to retirement and if maybe you are a little bit behind, there is what's called catch up contributions. So if you're
Mm,
over 50 years old, you can make sure that you are contributing extra above and beyond the normal amount that's allowed for a 401k plan. It's called catch up contributions. And you can also contribute more to your IRA than a person who may be younger if you're over 50 years old. So I would look into doing that, as well as picking up extra income and having the mindset that just because I am close to retirement age does not mean the end. You can continue to do things and use all of your experience and expertise in order to generate additional income, whether it's in the form of coaching, consulting, writing books. By that time, you have some experience and you are an expert. So start thinking of yourself as such and figure out what are you going to do in this next part of your life, or even right now, in addition to your job, where you can generate additional income. And the other thing that I would say is, if you are close to retirement, see if you can pay off those mortgages if possible. Work towards reducing your expenses. The less fixed expenses you have going into retirement, the better off you will be. If all you have to worry about is utilities and groceries, you'll be
mm-hmm.
okay, more so
Mm-hmm.
than, oh, I have this huge mortgage. You might consider downsizing. I have this new luxury car payment. See if you can pay those things off and get yourself in a better financial situation way before retirement. So reducing your debt or your liabilities and figuring out what you're going to do next, as well as what you can do now in order to increase your income and make those additional contributions.
Mm-hmm. Especially if you want to retire. Some people want to go back into the work world or do something different. I'm planning to retire and really be like on my own and do it when I want to, and not feel like I have to. Right. So to your point, I'm so glad I started thinking about that actually, 2 to 3 years before I actually declared, this is what I want to do, but just really started talking to people and making sure, to your point, let me get my mortgage payments down, right? And things I could pay off and things like that. So I wouldn't have to worry about that. So, well, I appreciate y'all. Tanita, did you have anything to add to what Dionne said, or?
No, I think she wrapped it up. Just know what kind of lifestyle you want to live when you retire, and get your 5-year plan together,
Yes.
so that you have no surprises and that you can do what you want to do. When
Yeah.
yeah.
Yeah. And I see, Robin, I see your message. Like, my total goal this year, I just set up the additional payments of 401k. Yeah. Yeah, absolutely. Absolutely. And like I said, with the 401k, and I think all of you said, make sure you're getting that match. Do not leave money on the table. right? Well, ladies, I appreciate y'all. And look, my first season, and I'm doing it with my sorority sisters, which is so special to me to have y'all on. But I'm going to put you guys in the green room. If y'all can hang out there for me for a minute. And listen, y'all, I hope you learned something tonight. And no, we will be posting some information in terms of resources. I will also be posting their social media platform information. So if it's something you want to call them about and contact them about just to get a little bit more information, I know they said they will make themselves available. So up next for Real Conversations, because I'm going to continue this series called Jumpstart 2023, and I'm going to be talking about navigating in the workplace, right? It's like, how do you set yourselves up? We're trying to reduce stress, y'all, this year, and try to attack it early on, because if you are stressed, you wreak havoc on all kinds of things. And you're not able to be your best. And we want to be our best this year, right? So navigating in the workplace, and it's going to be for those early in career. So if you have a young person who is early in career in your life, you definitely want them to join this next session. Okay. And it's going to be in March. And I will post the date on my platform, but I appreciate y'all. And tune in next time for Real Conversations with Michelle.
Bye.